Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A sixth bullish white soldier on Friday and a follow-on from the previous session's unusual bullish engulfing pattern type. There's also the third consecutive close over the upper trend line, currently at 74.65, of what I had labelled a possible descending expanding wedge pattern. That's currently between 74.65 and 68.98. Now, as you may know, I haven't been entirely happy with this pattern, hence there's a heavy dose of the word possible in front of it. For starters, it hasn't completed the usual requisite 5 touches combined of both trend lines, yet leaving that aside for the moment, its short life and steep downward angle as well. If we do have such a pattern, then last Friday was a likely confirmation for it. This leads to 2 diametrically opposed questions. 1, is it a false break higher? 2, how high will that move be? Okay, so for question 1, well, we don't know, not yet, but I suggest looking at what the market does when it approaches the January 2020 high at 76.30, should it approach it, and also this year's high at 76.35. For question 2, well, a primary target X would be in the 78.67 area. For secondary, much harder to reach target X1 in the 78.46 area. These are big asks of the market, especially from what is, in truth, a not too good looking descending expanding wedge pattern. So what do we have above as resistances? Well, the obvious one is May's high at 75.99, and then the congestion around the June 2020 high at 76.30, and more recent 76.35 high. Meanwhile, on the downside, below the broken upper trend line, we have the combination of the 2 moving averages, and that's the rising short medium moving average, that's currently at 74.41, and the medium moving average currently 74.24. This last bit brings me nicely to a new factor, which, though lagging, may help influence the bullish side. We have a golden cross this week, or we should have said actually last week, of the short medium moving average over the medium moving average. And with that, I'll finish this portion. So far today, well, an attempt higher towards that January 2020 high at 76.30, and also this year's high at 76.35. However, so far prices have been rejected before getting up there and looking like an indecisive spinning top right now. German DAX futures. Another very interesting day on Friday with a second bullish white soldier. The pattern itself, again, was not that interesting, but what it did, once again, was. So the market had recently become unentangled from a real mess of congestion consisting, and this is in no particular order, the upper time stroke upper trend line currently at 14.006 of the January to March bearish shift pitchfork, which was also the late March to date descending expanding wedge trend line. Then there was a neckline currently at 14.016 of the December 2021 to February 22 head and shoulders top, plus a separate mess of resistances between 14.079 and 13.804 below, which included the February 2020 low at 13.821 and the 50% Fibonacci line of the October 20 to November 21 move at 13.804. Hence, this is a real mess of congestion, which is now below the market. Anyway, the market pushed up and out of that mess and closed over all of those 2 sessions ago. Now, last Friday, prices closed for a second consecutive time over all those resistances that are now supports, as well as a first close up over the 50% Fibonacci line for 2022 at 14.342. The result of all this is that the market has taken the first steps in moving above the proposed descending expanding wedge pattern, which is a big move. Indeed, this pattern now has a primary target X in the 15.440 area and a secondary and harder to get target X1 in the 15.725 area. These are big asks. As I can see immediately, that overhead we have the descending medium moving average coming in, and that's currently at 14.513, and the long moving average currently 15.089. We'll see how these develop. Now, so far today, a gapping higher move since filled in that has risen and tackled the declining medium moving average, currently 14,513, thus breaching the next obstacle overhead. We next have the April highs at 14,617 and 14,623 before looking at the declining long moving average, currently 15,089. USC Mini S&P futures I'm constantly aware of today being a holiday in the US. But anyway, a third bullish white soldier on Friday, bullish long white Mariposa this time, and yet another suitable follow-on higher to the recent two-day bullish separating lines pattern. This time the market opened a little lower, but moved up through the important 40.55 level, the top of the congestion band that is, between 39.59 to 40.55 that I tried to trap the recent market, also pushing up through the June 2021 high at 41.26. Overall, this continues to be a pull up and away from both the lower time, currently at 38.93 of the January to March bearish shift pitch hook, as well as the middle time, currently 38.47 of the bearish Andrews pitch hook for the same period. Regular watchers and listeners will know I had earlier highlighted the crossover of these two times on Thursday 2 weeks ago as a period where one could expect one or more of the following: volatility, a change in trend, or a reinforcement of a trend. As I previously said, this was an important time period and highlighted it with a red circle on my daily chart. I've also drawn another red circle for the next crossover to come for these same pitchforks, assuming that both pitchforks will stay in will still be operational. This is of the upper tine of the bearish Andrews pitchfork, currently 42.21, and the middle tine of the bearish shift pitchfork, currently 41.93. And it will happen in a few days' time on the 7th of June. Hence, I renew my warning and what to look for volatility, a change in trend, or a reinforcement of trend. Before then, this current move higher now threatens those same two times, as well as the recent 50% Fibonacci line at 42.19. And so far today, well, a higher open and a small move down towards Friday's close before a recovery that is now challenging the middle time of the bearish shift pitchfork. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investors International Limited. And here comes the final bit.